Forgot my mic was muted. There we go. A little bit better. Hope everyone can hear me. What's up? I'm not great with video editing. It's taking me so much longer to do everything than I think it should. So my timing on everything's been really off. So I apologize about not streaming this morning, but we did have some crazy awesome trades. Most of it happened while I was working on stuff and just looked back and was like, oh, there's 200%, 300%. But yeah, that's pretty much a normalcy on crypto trading, as long as you trade the extreme ranges, right? And then leave a loose stop. Basically, you enter here at 1194 and it ran to 1240. You're looking at about a 400% trade, 350. But to get there, right, it would have hit a 100% and then come back down all the way minus to 50% and then back up to 200 and then back down to 100, right? So the only way to get these massive trades is to really not have a stop on them or use a partial stop. So that's what I've been focusing on. But for today, we got a little bit of an interesting timing here. Unfortunately, everything's kind of consolidating right now, so it's not ideal for any sort of trades. But as soon as we break out of this range, my concern is we rejected the $618, but the bulls are creating a little trend here. So yeah, this is the $200 account that I funded to use the bonuses that Bing's offering anyone who makes a referral under me, or who creates a new account under my referral code. So I put $200 in yesterday, and then I took a single trade this morning, or maybe two trades. I'll take a look. So small, it's hard to see. But anyways, yeah, $20 trade. So I think we had 216 in the account and bumped it up to 240. And then I used that $5 bonus, which you see open right now. For the time being here, I'm just waiting for a little bit less chop. You know, something like this is really nice and fun to trade. Something like this is awesome to trade. This feels like a trap, especially with the timing for the weekend and with... Ooh, SPY and NASDAQ just went back green. Yeah, actually, I think it is time to go long on Ether here. So if we can get an ABC, maybe a 61 retrace, so something around the 1220 mark. I don't really want to fight trend here, and the trend is consolidating. I'm just waiting for a spike. The 15-minute looks nice. It's just so wicky. I mean, it's really hard to. You basically just have to leave a position open. If you're looking at a 15-minute candle like this, these are all 100% moves, or almost. Yeah, that's 100. That's 60, 60, 20. You guys want to trade some SPY? We can do that. Everything's nearing the 61 retrace. It's going to be interesting to see how the bears react here with the weekend. But honestly, I'm probably planning on the reason I didn't go long is this felt good and clean. This did not. It's a grueling push into major resistances. I mean, a lot of people bought up here, same with Ether, but all right, here we go. I'm gonna short here in a second. It's so crazy to think that like that's a 25% move. The 12:30 where I was thinking about shorting in less than 2 minutes to 12:26. Almost a 50% move actually. It's just so much leverage. Dylan, you just have to take a little quiz about margin, but they give you unlimited tries if you fail. It's a good learning opportunity if you get something wrong, but it's very basic. And then no, there's no minimum balance for trading, for day trading. All right, so just to spice things up, because $200 is really small, I'm gonna trade pretty aggressively, and then I'll just do, I'll take profits out if we hit the 400 mark, and then I'll call it if we hit the 100 mark. That way, we never go on tilt and blow more than $100 in a day, but trust me, it's very, very easy to make much more than that. Got a nice little volume spike there, but we broke trend. I feel like JB right now. On a 30-second chart to draw trend lines. Yeah, so we broke trend, so even though we saw the nice bullish volume spike, you don't want to enter there. Anyways, let's go ahead and put $2 short right now. Wait. Yeah, let's just get started here. So I'm gonna put $2 short and then $2 long in a minute. And that way I can kind of get a gauge of how things are moving. It's a very wide bid ask right now, by the way. I hit that trade before Yo, what's going on, Derek? Been a little busy. My sister had a kid. Been over there lots, and then I'm not good at multitasking. So with the volatility and everything just ridiculously horrible for options, I kind of shifted towards this, and then we'll see where this goes until the volatility is fixed. This is fun. Over leverage trading. It's actually kind of too addicting though. And if you feel like you need to be in a trade at all points in time, you're just going to lose money. The trick is you really have to play the outside of the ranges in the trend, right? Because it's so over leveraged. So right now, we hit the bottom Bollinger Band on the 1 minute and bounced off of that. So now we're looking at the 5 minute Bollinger. We didn't even come close. So I think we have more downside down to say 12.13, 12.15, which is about 100% if we catch a nice short. So again, I only put $2 into that trade just because I do like to have it's almost like a reference for me. It helps me gauge not so much, you know, hey, what's the price action doing, but more so the intensity of the moves. You know, if I put $200 in and I get a minus 5% fill, it's kind of annoying. But even worse is if I put $200 in and get a minus 5% fill, and then it goes up to 50%, minus 50, you know, within the next 2 minutes. And just having something like, you know, $2 short and $2 long at different points in the day, right? So we put our $2 short in, and I think we're finally profitable on it. I mean, it should be. Oh, I'm looking at SPY's chart. That makes way more sense. Anyways, we put our $2 short, and we entered pretty much right at the bottom, just because I wanted to get with the trend. Didn't really care. But now we're going to put our $2 long, and more than likely it'll be $40 long. But I'll do two $20 entries. Let's do that. Actually, let's do 10 and then 20. Alright, so let's put the first $10 in long. In the and there's our 5% on the $10 long. But we don't want to put a stop, right? It's only $10. We want to put our stop, let's say 10.22, 12.22, 12.21.16. So 32% stop is what I want to put on. And then once this starts to move, say 20%, I'll put my stop at 10. And actually, I'm gonna put my, just because I think this might reject here, I'm just gonna close it. Take my $6. Yeah, we did reject. Can't close it. Didn't get it. Volume's picking up with SPY down. Alright, so we're at 15% on the first trade we took of the day live. So I'm gonna stop at let's do 25.98. And this is Ether. I'm probably only gonna trade Ether for right now just because it's moving so nicely. And now we're going to start to add to this position on the pullbacks if it starts to move in our direction. Because we're green, we'll do another $10 entry. And then I have margin to add if I need to slow anything down. Just because I do think... oh, we're closed. That's okay. This is Wiki. We're going down more. Yeah, so $10 is definitely not the way to go. That's what we only did one entry. I thought we'd have more pullbacks. I didn't think it would just kind of rip like that, which means we're gonna get consolidations. I put 20% of the account long right now on Ether just because SPY is breaking out and Ether's consolidating at support. So ideally, nice. I just don't want to see an ABC here, which really might happen because this is the trend break, right? So we might get a C back down to, say, actually, it already did it. There we go. I have a partial take profit for 25, so just over half, at 50%. Um, SPY broke over the 61.8. I think we should take off. And because we're so choppy right now, I don't really want to just get stopped out of trades. I'd rather take a loss. I'd rather take a loss than take, 5% gains, just because I do think that we're going to break out to the upside, and I'd much prefer that 30-40% gain. But I did put take profit on 50% of my first entry, and I used 20% of the port long here. We're up 4.5% on it. It should follow SPY. And then, yeah, we're looking for 1234. All right, and then I'm gonna put another, let's do another 40 bucks long in a second here. I'm betting Ether will follow SPY, not the other way around, because there's a divergence right now. So here, sorry, I had the SPY chart up. This is the Ether chart, and if you look at SPY or NQ right now, they look good. They look bullish. We just broke to a new high. We should probably consolidate here. A little bit of a bear trap. People looking for the double top. And if we don't break down below the 38.70 mark, we should pop right to 38.966. I'm going to stop loss down a little bit to 38%, just because I don't want to get stopped on this, and then I'll add a little bit of margin in a second. And then I'll go long in a second. All right, so I'm gonna add, let's go $5 margin to that position that's down, and this will lower the leverage basically. And now I'm gonna put another 20% long. There we go, right at the candle change I like to go. Especially, what I found is the 15-minute time swaps. Let me pull up a 15-minute chart and show you what I mean. They have really clean entries on the candles. Ooh. So I think we're good. I think this is the entry. And then now that I was gonna say, now that my first position started coming back a little bit, we can actually pull that margin that we added out once it starts to come back if it goes green, and then we'll get that leverage back. So if you have like a $1 position, for instance, and it goes, 100%, and you add, let's say, $2 margin, you'll only be up like 10% or 20%, 30%, I think it is. Alternatively, if you have a $1 position and it's down 50%, and you add $1, it'll go up, so you'll be down 25%. And then once it gets back above your entry price, right, that's when the leverage decay starts to happen. So basically, you're paying for a slowdown in that range. So we entered, I think it was like up here for our first entry. I tried to buy the 61.8, and I added a little bit of margin. So now I added the margin down here. If this starts to come back green, we can remove all that margin, and I'll show you what I mean, basically. Hopefully it pans out. I think it will. Some things just take a little bit of time, but because SPY was signaling up and NASDAQ was signaling up, they're so identical right now. Oof, I don't like that rejection. This candle's pretty important. This next 5 minutes are pretty important. This could have been an ABC, like a really small one. A down, B up, C down on a 5 minute, and that came right to the 61.8, which is, supposed to be a wave 2 marker. Alright, now we're up 21%. We're green on the trades, yay! So obviously, I want to say a tighter stop on the first entry, but the first thing I want to show you is removing the margin we added. So I think I added what? It's only letting me remove $1. Must have pulled down. But basically, once you add margin, you can remove it, and then your leverage comes back. I'm not sure the repercussions on it, aside from you can't remove it if you I really want to get out of this first trade, so. So yeah, that 5-minute candle was important. And now we just can't reject fully or wick out, and we should be good. This should be a very lucrative push to the 1235 mark. And that's kind of where I want to take my profits. But I also am going, because I am, I think, $90 long on a $250 account. I do want to get the fuck out of that first trade with a tight stop as soon as it breaks out. So ideally we see an impulse up, close the first trade, leave the second trade, right? So we just got our 8% on the first trade, which means we made 4% on it. So I'm going to try to get my stop in there. So 27.29 would be a dead break even of 0.25% gain. So it's still a little too close to that. But here we go. Now we're gone. So now I'm going to put the stop at 27.8. So we'll take a 4% gain on that at the worst, which is $2.2. And then now my second entry is up 40%, so we're going to put our stop to 20% gains. And our initial $2 short position, which we did nothing to because it's only $2 and it's just a hey, see what the heck's going on. But anyways, yeah, that was the trade. So we entered here initially, added a little bit of margin, entered again here, and now we are at $273. Oof, keep it going. And like I said, we're looking for that 1235 mark. So let's go ahead and close or put our stop up on the bad entry. So we're at 30% stop now on the bad entry, meaning we're making a minimum of $15 on the $50 position. And then our good entry is up 78%. So anyways, this is kind of how I trade. And then the big thing is just don't tilt. I'm gonna put a stop loss at 80% on the short $2 position just to get my $4 back. Anyways, that's a very nice trade. So yeah, we just got the account up $100, so 50% gain on the day. That's not bad. All right, put our stop at 37%. And we just hit 100% on the first entry, and we did hit that 1235 mark that I was mentioning. So I am gonna close 100% of the first entry, and then I'm gonna put my stop up to 54%, so 1230.29 on the first entry. So the reason we closed that there was because we hit the 161.8, and it's very likely with how crypto moves basically in waves of liquidations. So what I mean is, if you open a position, right, strangle, and you put one side long and one side short, you'd think you'd be able to make money, right? But what usually happens at that 50% mark and at that 100% mark from whatever consolidation range you were just at, is there's a wave of taking profits and stop losses being hit. And what happens is you get this sharp sell pressure if it's a spike up, so we just hit that 100%. And then from that 1235, we dropped 40%, right? And that happened in 1 minute, but this trend isn't over. But that's basically how they get you. So you'll try to do, hey, I'll put my stop at 10% green on the one leg, right? And then the other leg, I'll have my stop at 20%, or let's do 50 and 40. And you should be able to make 2% on the trade because it's 8% for the fees plus your 10% difference. But what usually happens is as soon as you get stopped on the one, it spikes back up. So yeah, just be careful with that. And these are little things you'll learn. But anyways, let's take a look. I've taken 1, 2, 3, 4, 5, 6, 7, 8 trades total, and we're up $100. Again, this is the referee account I made under my referral code. That way we can use the trading bonuses and everything together too. And once the trading tournaments and all that fun stuff starts, it'll be a blast. But yeah, definitely going to have a lot of fun with all this stuff, guys. We're just getting started. The stream I expect to get much more popular. As soon as I figure out how to make videos and edit and all that fun stuff. I'm gonna put my stop loss up to 62, but I'm gonna make it a partial for 17. So yeah, basically, wait, like this isn't a good time to trade again. Remember how I was mentioning that I didn't really like the range that we were in through this whole thing, and then I waited basically until I saw the rising wedge break down, and then I started entering as soon as we found wicks, right? So I entered here, and then we started going down. So I added some margin so we didn't get stopped or anything, and I added a bigger position down here. All in all, we took some really nice trades. So the account is up $100, so 50%. Got some runners left, but I'm not gonna, you know what I mean, as much as I want to. I guess just the degenerate in all of us, the gambler, right? Like, I want to have all my money in this, especially because it's only $200. But the thing is, just because I'm saying it's only $200 doesn't mean it's only $200. A percent gain is a percent gain, and a percent loss is a percent loss, especially for, you know, people with less assets. So I want to make sure that, hey, we're super disciplined. All in all, I think the first day we did $17 gain. Second day, I think it was a $40 loss, and today we're up $100. So not bad. But that's the beauty of not scaling too, is, you know, hey, I had that bad trading day 2 days ago. It wasn't so much bad. It was just, the problem with me trying to stream in these time windows is you're forcing things. If it's in a consolidative period, you really shouldn't be trading. Sure, you can get quick scalps, but all of this range, right, is just how you lose money. You're gonna be like, oh shit, look at this breakout. We got the 3 green soldiers. We're coming all the way up. Oh wow, we just popped over this resistance, you know, and then you're sitting here and you enter long, and the next thing you know, you're down 50%, and you get stopped, and then it does, and then you short here thinking, oh, I just got stopped out of my long, right? But that doesn't happen because this range is just getting tighter and tighter, and you really don't want to trade it. What you want to do is wait for it to break out of the range and then enter at the key levels. So yeah, I think what we're going to have to do moving forward is I'll just stream basically when the volatility is high. I am going to be getting back into options, so anyone who's a sub in the Discord, just know I will definitely be getting back into that. I just needed some time off from options because it was more than upsetting to see a futures position which you can put a stop loss on and don't have to worry about gapping up or down being more lucrative on a 1.8% move than a 2-day to expiration out of the money call. And the only reason that's happening is because the VIX and the volatility are so high that the Greeks are just making the extrinsic premium so expensive. So even if you're nailing these overnight moves, right, you're basically not getting the same reward you would get on something with infinitely less risk. So that's kind of why I strayed away from the options for a little bit, and then I got sidetracked into learning how to do all of this. But yeah, we're gonna have a blast with this. Plus you can trade futures. This is the short opportunity, by the way. It would be right. Nope, we just passed it. So basically what you're looking for on these corrections, right? So this is the motive wave, and then this is the corrective wave. So this is a consolidative wave. It's correcting this big push up. What you're looking for is the 61.8 retrace, where the smart buyers who didn't get out with me, you know, like we literally closed. Let's take a look. We closed at 12:34.12, and it's within $1.12 or 50 cents of the top, so that's pretty good. But anyways, all these people are still in that position, right? And now the super smart people are going to sell. In retail, the dumb motherfuckers that we are, we bought this first dip because that's what we like to do. We're like, oh my god, look at my indicators are saying buy, blah 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 blah. But this is a low probability setup. More often than not, you'll find resistance here or a double top, and then a consolidative push, and then a 61 retrace back, and then your push up. So we try to avoid this. You know, hey, sometimes it might just impulse higher, but I'm watching NASDAQ and SPY, and I don't see that. Plus, we already have $22 long on a $300 account, so there's no real reason. It's 100%er. It's not bad. There's no real reason to add here. I did close half of that position at 90% because, like I said, if we don't reject at the 6218, there's usually a double top, and then a push back to at least a 618 on the bullish side now. So basically, you'd look for, you know, like a double bottom, but if they get an engulfing here, it's gonna continue down, be a flat. So it would have to be 1233. Oh yeah, any questions, feel free to let me know. Yeah, I do it on every time frame. That's why I didn't enter anything here. Basically, I just went through the trade we took here, and then added margin, and then added heavier down here, and then we closed out here, right? I think I still have $10 of it open. It was like a $100 trade. So what I don't like is this zone. So once the trend's broken, I don't really want anything to do with it, because there's the 61.8 retrace, the ABC, right? So hey, this could be an A, B, C. That's the first resistance. Second resistance is the double top, which we saw reject here, and then the third is just and the third is it's just not good risk reward, right? If you're entering long after it breaks through those two resistance zones. So basically what I said was, hey, this was a sweet ass trade, now I gotta wait. So what we're waiting for is trends that are tradable. This is not. This could go either way so hard, especially because it's getting close to the end of the day. And we saw this big bearish volume spike, but we're sitting, in this clean bullish area. So yeah, basically I do use ABCs on every single time frame. It's more important, I would say, on like a 15-minute up, but it's extremely helpful for gauging risk rewards for something as leveraged as these crypto trades. What you don't want to do is just jump in blindly. So to avoid that, it's very easy if you set up like a couple rules. Your first rule should be never enter long at resistances or short at supports. And the reason for that is this, right? We just hit this nice double top. We're consolidating back up. Holy shit, we broke that resistance, right? It just went 20% higher. So you enter, and then it goes all the way down to 33, which is a 45% loss. So you more than likely get stopped out. So even if this candle comes back, you just sat through a shit trade and it felt horrible. So rather than doing that, you need to be a little bit smarter, and you need to play with the trend. So you always want to trade only the direction of the main trend, and you only want to enter long at support and short at resistances. Doing this because, again, there's so much potential for a quick 100%, a quick 200% on these crypto trades that move intraday 20%, that you just want to limit yourself. Just watch, just be patient, and make sure that risk reward is set up appropriately. Like right here, this looks like the ABC, so this should be our rejection, and we should actually reject down to 12.27, I would say. So now that we've been long, right, and it was a sweet ass trade, we don't really want to just jump in short, because there's nothing indicating that we're going to sell off, besides, hey, we're consolidating in a bull flag, not even a rising wedge, at a resistance. So again, not a good time to go long and not a good time to go short. We need a jet down below the 1232 mark, so like the 1227 mark, or we need a new trend up that's maintained, right? So let's look at like a 3-minute chart so you can see what I mean. Bad first entry, bad, right? You don't really like, yeah, it'd be dope if you bought this single candle here, but that's not a good entry because you're fighting trend. So this is trend. Now trend just broke, right? So if we draw a line, trend broke, and now because trend broke, we're looking to go long, but only if we can get an entry at support. And that's when you start to enter on these pullbacks. So you'd probably enter here, and then your stop is always going to be right below this candle, right? And the reason for that is it's just a very safe way to limit your risks while also avoiding over trading. Yeah, not bad. We are losing a little bit of money on this pullback here. We're up to 311 on the account, so just over 50% on the day. We just started it today. It's the referee account. I did make a video, but then I watched the video, and you can, like, because my phone shows the letters as I type in a password, you can see the password that I was recorded typing, and I'm not good enough at editing to like edit, so I'm not gonna post that video, but I'll make a new one. Basically just went over, hey, look at these sweet incentives. It's super fun to trade, super easy to make a lot of money. Don't tilt, just stay consistent with what you're doing. If I'm trading $200 a day, I'm not gonna start using $100 entries on each trade unless I get that 200 up to 1,000, right? I don't really want to go over 10% an entry. Rather, I like to have about 30 or 40% max to a position, but I don't like to use all of it in a single entry. So what I want to do is use 10% first, because I can add a 20% position if I didn't get that good entry, right? So 10% first, and then I look to add based on what happens, right? If that initial 10% goes wicked green, I'm probably not going to add until we see a pullback. And if that pullback happens, hey, that position's still green, goes 30%, pulls back to 15, you can enter on that pullback, right? But you have to make sure that you're not going to lose money on the trade by adding, so you have to have really tight stops on those. Otherwise, you'll feel like, not great, because hey, I entered. You can't add to a specific position to lower your average. It's two separate positions. So if I do a 10% entry and it goes 30%, and then it pulls back 15%, and I do a 20% entry, so just about twice the size, and it goes down to my initial entry level, I'm now down 10%, right? So that's bad. So you want to make sure that doesn't happen. So I find it harder to add to the winning trades trading leveraged than I do in actual equities or options, just because you can add to them to lower your average, whereas this, it's not the same. It's more so like a new position. and you'll want to oversize your next entry. Everyone does. It's just human nature, right? Like, oh shit, the first 10% went 40, right? I should put 50% in. I can't tell you, how many times after trading for too many hours in a row, I did exactly that. Oh, I don't even have a stop on this. Whoops. So yeah, don't do that. Don't tilt. That's the biggest thing. And if you are losing on trades, just stop fucking trading for a little bit. Like, zoom out and realize, like, this isn't a good range to trade by any definition. This is right. It's hard to get stopped. If you enter here and you wait 5 minutes, 15 minutes, you're up 20%, right? Now, if you enter in here and you wait 15 minutes, so 5 of these candles, you're up 12% or whatever it is. And then 30 minutes later, you're red 20%, right? Bad trades, not good. So just wait. So we just broke the 318. And now we're just looking for that 1227 we mentioned earlier. I said that would be about where we added. I don't like inverted hammers. I just think they're such a shitty. So it's supposed to be bullish, right? Seeing an inverted hammer, it's saying, hey, we have buyers still. We're holding this support. I just really don't like it because at the same time, you also have sellers still. We never once broke above this line. So it feels low. I much prefer an evening star. An evening star to the inverted hammers. What I've noticed is crypto's inverted hammers always go red. Just because I don't really think I need to. I already did take profits. That was a $100 position and I'm down to 10. So I'm okay with losing this $5 of gains. Obviously I put my stop at 4.5%. But what I think is going to happen is we're going to hit that 1227 and then we're going to find a long entry for power hour because it's really looking bullish. All right, so we did just hit that 12.27 mark on Ether, so I am going to put 20 more bucks long. But obviously, what I don't like to do is, again, I'm all about less trades because it's so easy to make money, but it's so easy to lose money. So I don't want to buy it right here. Almost always the first bullish candle after a steep downtrend is a bull trap. Like almost always we'll get at least a retest down to the bottom of the first candle before the hammer. I mean, before the star, right? So what we want to do though is if this retests, it'll consolidate for a little bit, and if this retest stays green, so basically anywhere from here to here is still bearish territory. So I don't want to enter in here unless we're really close to the bottom of this, and ideally I see more volume go in and then SPY start to pick up. Oh, we're gonna do it. All right, so I'm gonna put 10% long now at the 12.28 mark. So we didn't get the exact low that I wanted, but that's okay. And we might need to close these positions. So basically, let's gauge our stop here. Let's put our stop to 23. So that's a 40% stop, but again, I only use 10% on the first entry because I want to get in at the 12.37 range like we planned 20 minutes ago. But I know that, hey, we might break all the way down to closer to the bottom here at we're on the wrong thing. We might break all the way down closer to that 12.21 range, right? So again, 10% first entry, wait, add margin if you need to, 20% second. That's how I've had the most success. And then if your first entry is just bomb, just chill. I don't usually like to add just because I seem to always lose money when I do that. I don't know why. It seems like I can never add to a winning position and successfully make money. All right, so yeah, I think we're good. I'm gonna put another 10% long on ETH here. Not 20, just 10 again. So all in all, I have $50 long on ETH now. The max loss I'd be willing to take is going to be about 50%, and that'd still leave us up $50 on the day. And before that 50% ever happens, I would both I have one more entry long, another 10%. I like to get to that 30 or 40% of the account mark for a side. So I would use that, and then I can add margin to these positions if I need to lessen the stops a little bit. Okay, so because we're in a downtrend, we want to put our stops down quick and tight once we go green. So as soon as we hit that 15% mark, stop goes to 6. Yeah, I've noticed that too. Those retests definitely seem to happen often. And I've also noticed it's almost free money if you do the exact opposite of the little Bing alerts. Meaning, Bing is like, uh, if Bing is like, hey, Bitcoin's up 5% in an hour. If you short, like the second you see that alert, it almost seems like you make money every time because, it's gotten me excited a few times when I see these little alerts. Like, oh, it's down 10% in the past 24 hours. I'll like try to short and then I immediately get stopped. All right, so now basically we're down $6. Oh, we got another entry. We just don't want to see this 34.91 get broken, so that's why our stops are sitting right here. You can see these yellow lines. Those are my stops, right? And this is where I entered. So no, we ain't at all get a perfect entry. And in fact, I'm a little nervous with the weekend and SPY, but it really seems like alright, I'm gonna put our 20% entry now. Go. Looks like we might get the double bottom here, eh? I just need some volume. With NASDAQ and SPY continuing to rise, right? I'm watching them bottom right of my chart. You can see them on the watch list, the percent change. With both of them continuing to rise and Ether holding this 1224, I think that we make some money here. Up another 0.1 on the indices. All right, see what happens. So this 5-minute candle closes in 1 second, and it's a dead even candle. Oh man, I don't like that. I feel like every time I see a 5-minute candle open aggressively green, it's a fucking bull trap. I don't know why. Maybe it's just from over trading and being like, oh, we're breaking out, and I enter at that first green, but it always goes red. It might be time to short. So again, I just want to keep my losses really small. So you can see here, we're up $1.53. I have 5 positions open. I didn't know that. Oh, you know what it is? It's that bonus trade I took, the free $5 one. It's a 5x, yeah. And then I took, this is our initial entry, the one that was at 100 where we closed most of it. My confidence in this position is waning. I don't like inside candles. They're really not fun to sit through 5 minutes of, hey, do I short here or do I stay long? Do I add, right? None of these positions are really doing bad, right? Nothing's below 20. No, you fucker. I'm just really afraid they're gonna hit the 68 retrace. Yeah, they're going to, unless we triple bottom. I'll move my stops down a little bit. It won't let me. Alright, we took a couple stops. That's okay. So we didn't get the entries we wanted. It's one of the risks of end of the day trades is we had this divergence on SPY, which is super frustrating. But that's okay. I just can't tilt. The big thing you want to do when hey, we just had what, a $40 loss, $50 loss. The biggest thing is you really want to, try to fix that immediately. And that's really not a good plan. I think we may have seen a big ABC here on the 15-minute. We might push down to 1206. So I am going to short in a second. This looks like we might go bearish, but again, I think the indices are going to pull us up. It's just a very confusing time. So we hit the 61 retrace here. Oh geez, it stays fucking. And then this is how they get everyone, right? They do a full bullish engulfing, and then they're gonna pull it back down, stop out. So they'll stop out the bears on this engulfing, and then they'll stop out the bulls that they just convinced to buy when the bears got stopped on the pullback, and that's where we want to enter. It's a big green candle, man. Engulfing. Bull trap. Entry. Engulfing. Here comes the bull trap, right? It'll be right here. And that'll be our entry. Unless SPY just takes off, but it doesn't look like it. Remember when I said I wanted to adjust my stop? A little lower on those long positions that I had the 40% stop on. We got stopped out at 40%, which was 23, and it went to 21, so it would have been a 60%. So I was actually looking to add margin or lower my stop, but anyways, we did catch the nice little trade there. I did put my stop up, and now we're back to 300 bucks. Oh shit, sorry guys, I'm really bad at reading these chats, and because I'm not streaming with John right now, which I think honestly might be a little better for me. I have pretty bad ADD, and I do really well when I can hyper focus on something, but if there's too many distractions, I can't really focus. So yeah, let me read this chat real quick. I am, you can see it on the top left there, Marcin. It's a 3 minute right now, right where it says Ethereum tether, and then 3, that means minutes. It'll say 30s for seconds. And then for 8 hours, it'll be an H, and then days will be a D. But that's for trading view. You can always tell top left. Okay, so we actually ended up taking a small loss on that trade here, just because we got stopped out of our first 20%, and then didn't add to the second 20%, which ended up being, let's see, 35% gain. So I took minus 11, minus 10, and then a plus 15. So we lost $4 on that trade, plus the fees. So more like $8. So I think the big takeaway is I did exactly what I always tell myself not to do. I got excited, right? So I entered that first 10%. And then nothing happened, and we just started consolidating, and I was like, oh my god, let's do it, it's gonna break out. And I entered that second 10%, rather than waiting to use a 20% entry a little later, if it had broken down. And then because I had the two opened at the same time, it's too much to manage to add margin to both of those to slow down the leverage. So basically what you can do if you're doing incremental entries is you can add margin. Sorry, I think I might be a little close to my mic, I forget. But you can add margin to your position if it starts to move against you. So the key is take a small position. And if it starts to move against you, let's say you take a $20 position, if you add $5 margin, you're effectively decreasing the leverage by 25%, 25x, right? So what that means is if I'm down 50%, and I have a $20 position and I put $5 leverage in, what'll end up happening is I think this might break out again here. This looks like one of those very few times that I do want to enter for the breakout, just because this is so much volume. Anyways, you can add the margin and that'll slow down the percentage movement while it's within the negative area or the positive area. But you can't take margin out, right? If you add it and it goes more down against you, you can never take that out. It'll just slow down your leverage and decrease your stop loss or make your stop loss further away. Now, if you add it and let's say the position's down 30%, you add some margin and it goes to 15%, right? So you just basically put 50% of your position in margin. You took that risk from the brokerage. They're like, okay, we'll chill out. And now your percent move is barely going to change. It'll be a 50x basically until you take that margin out. So you don't ever have to take it out. If you put in, a $100 position, you put in $50 margin, you now have 150 position. It is initially 100x, right? If you have 100% profit take, that's 10% on 100x. But if you have, oh, this is beautiful. Yeah, I should have taken that breakout. Sorry, I'm trying to do too many things. So yeah, if you add the margin, it'll turn your position into basically a 50x or whatever, how much margin you added is my understanding. They don't really say that when you read about it, but basically it just widens your stop loss and your profit takes, which I equate to decreasing margin. Decreasing leverage. And then when you want your leverage back, boom, you can take, if your position's up 10% and it was down, so you added your 50% to the portfolio. I'm just gonna put I'm gonna put my stop up here on this. Actually, no, I'm not. Remember earlier someone asked me why I didn't stop out of that trade, the little runner I had. And I was like, well, because I think we're going to hit the 27 mark and then pivot up. And we actually went all the way down to the 21, but I never stopped out of that trade. And now it's back over 100%. And the reason for that is what I find is to get those 600% trades, you either need to just walk away and do nothing, or have runners. Basically take 90% of your trade out and then leave that 10% with the loosest stop ever, no trail stops. Because once, this is 100% move, that's 100%, this is 100%, that's 100%, right? Once you get these breakouts to a new range, a new level, then all of a sudden, I entered here at 1196. I'm still at the lowest point in the day, up over 200%, but it went all the way up to, I think, almost 500%. So, damn, I should really just go long. I'm putting 10% long. This is a breakout that I don't really like to buy breakouts, especially because we're above the Bollinger Band. But this just keeps moving. It's not even pulling back. Like, I've been waiting for a pullback, but it's just consistent moves. And then you want your stop on anything to basically be 2 candles back for your initial entry. But if I do get stopped here for 30% on a 20x position, yeah, that means that I have to close my 100% position to balance that. Yeah, it's unfortunate. I messed up the stop on the long entry here. Otherwise, that would have been, you know, closer to another $100 gain. But I mean, you can't expect to win all the time, and you can't try to fix your losses by compensating. So the last thing I'm gonna do if I get stopped out of a long entry and I still have a long open is enter more long. Right, I want to get stopped at a second long position, or have it go profitable like we just did. Otherwise, it's gonna hit my stop. So you see how I put my stop? Yeah, it stopped out for 30%. So you just lose a little bit of money there. No big deal. It was only 10% entry, so it's $26. 30% of that is not that much. It's like $12. $13 actually. Yeah, I did exactly what I shouldn't have done. I even said it too. I was like, yeah, we shouldn't buy, should never buy long at a resistance, because then you have to make these sacrifices. So because I just took that $13 loss, I really want to make it back, right? So I want to close this position at 84%, rather than the 100. But I'm not gonna do that. I have a lot of faith in the end of the day here. I mean, ooh, actually, we should trade SPY for the end of the day. This is gonna break out in a minute. So if you ever see a wedge forming, it's just like such good risk reward. Let's go long on SPY. Why? I like to gauge things by the depth. So this is pretty symmetrical, but basically there is more bearish entries than bullish. What that means is bears effectively have to spend more money. And here we just broke the trend to the bottom side. So this is usually it'll break, false break. Your entry is going to be down here at resistance. So it'll be 39.1. And then we'll go, let's do $50. Oh, I gotta get to, yes. Boop, boop, boop. Sorry, it's hard to find it on the phone app. Took me a minute. Oh, and that's good. So yeah, so this is the false break that you look for, and you're looking to find a key support that holds and then enter on the way back up. I mean, you also want to read the news. Nothing's popping up on my SPY feed. Alright. A lot of bearish volume. Massive volume usually is trend reversal though. At the end of a pivot. Yeah, this makes sense, right? Look, it already got the Elliott wave for us. And it was literally the perfect 168. Damn. Damn. I'm gonna go long on ES here, see what happens. Bear flagging though. All right, that'll do it. The Bears lost. Bears lost. It'll pop up on the next two candles on a 15-second chart. Yeah, I'm too fast of a chart, but I'm pretty sweet, right? Like that's pretty cool. How did I know that? Basically, the second the Bears didn't refill so it's a volatility match. Bulls won. I wonder what the so the trading fee is for a $50 trade. It's $1.50. It's not bad. It's like what, 3%?
And I literally thought in my mind, like, I could literally stay here forever. And that was probably like the best moment.
I don't really like looking at this 15-second chart on ES. It's really too much data. So again, we trading the wedge. Bears had to trade more often than the bulls. That's usually indicative. A steeper trend is harder to maintain than a shallower trend. So because the Bears had the steeper trend, more often than not, it'll break up to the other way, right? To the it's with the shallow trend. And the big thing is we just got to get through the 39.17 resistance, but again, the false break always used to get me, and then I started anticipating the false break, and I started doing much better on these little wedge plays. But yeah, because of the timing, and we know it's a Friday, we can expect an intense move for the next 30 minutes. And would I am hoping is that it's absurdly bullish. But I do have to run to the bathroom, like really badly, so I'm gonna be back in a minute here. I'm gonna mute my mic and throw on. Actually, I'll leave this stream open. I'll be right back. Sorry. Before I went, I did put a 25% stop loss on the ES trade. It's a really small trade, so I'm not that worried. But yeah, my stop is chilling. It won't show it on here though, because TradingView doesn't let you chart with Bing's future data, because that would prevent you from having to pay them to get live futures data. I think it's like $8 a month, nothing big, but that's what I have to do. I'll be right back. All right. How we doing? All right, so we did have that break. This actually looks bearish now. We broke a little too far below. But I'll give it its fair chance. Twenty minutes left in the session. I think we're gonna end red. How to trade? I don't know. Some days I do better than others. I think the big thing is just don't tilt. That's kind of it. Everyone can be successful if they just have like safe rules that they stick to, and consistency. Meaning, if I trade random amounts each time, I'm going to be so inclined to trade heavy after each loss. And what that does is your losses will outscale your wins. You know, I've had days where I'm like 15-1 on trades, but I still ended the day semi-red, because I continued to scale, and then I take a big loss, right? So I think with trading, it's just crucial to not tilt and have rules, right? So hey, I'm gonna use 10% my first entry max, you know, or maybe 20% max, but most of the time it's always gonna be 10. The max amount of my port I'll put on a single direction is always gonna be less than 50, and I'm never gonna enter that 50% at one time, right? And when you add little rules like that, all of a sudden, you know, you go 14-1 on the day, and your portfolio's up almost 50%, right? And that's just, hey, I had to minimize some losses, and sure, I missed out on a lot of gains, especially that one really pissed me off, that one long entry. But again, these things, they happen, right? Like, you gotta think of the bigger picture. It's safer for me to have that 40% stop in to avoid a liquidation, and miss adding the margin or adjusting it lower, which I did, right? I hit the stop too quick. It's much better to do that than it is to I've had it happen where I enter a position and before I put a stop in, like within moments, right, it's liquidated, especially on the big candles. Like these impulse candles, you're not gonna be able to see it because it's a 10-minute candle. It's showing all of that data at once, but like there's liquidations on both ways in this candle. Or let me go to Ether so it actually makes sense. There's liquidations both ways on this candle, right? This 1045 to or 1245 to 1280, that's a 400% move on 100x. You gotta be safe, and then you gotta keep runners. The position I had today, which I tweeted about, it was like a $200 contract that I forgot I even had. It was a runner on a $1,000 position. I think I made 30% on, and I left like $200 in it. And then I came back from doing my stream setup, and it was $600, right? and that's just a runner that, you know, you almost forget about, and you come back and you're like, holy shit. And obviously, I can't leave a $200 runner on an account where I'm only trading with $200 to start each day. But what I can do is leave a $10 runner, and then as we get into this streaming, I will start doing days where I actually scale a little bit. Maybe one day a week I'll do like a $2,000 day or something much more fun, for me at least, than just a $200 day. But I don't want to ever intimidate people, right? So I don't want to do a consistent $2,000 day, right, and have 2 or 3 losses, which happens. But you know, that's okay if you're able to fund, you know, many of those losses without affecting your next wins, right? So if you're winning 60% of the time, and your wins are the same size as your losses, then you're profitable. 51% of the time, and your wins are the same size as your losses, you're profitable. So you have to put your rules in like that. Anyways, we did just hit 120% on ETH. ETH's taken off. I'm gonna it's outside of the Bollinger, but I'm just gonna put 10% more on because it's really moving. No, I'm at short 20. No, I'm not. So remember the beginning of this stream? I was like it's so over leveraged. The big thing is just not to enter breakouts. So you don't want to buy long at the top of a breakout, like I did twice. But yeah, we got away with it this time. And just put your stop above. We're up 172%. Someone asked me why I didn't close that position, and this is why. Now, what I'm not willing to risk, right, is it was initially a $100 position, and we took profits between 50 and 90% on it, which is really good, right? All right, we just got stopped out of the 10% I added. I just pushed that way up because I don't like how tech isn't moving with us. Makes me think this is gonna go boop, but I do think we're pretty close to the 1256. So, but that's still 100% from here. So I think we do get to the 1256, but because we're outside of the Bollingers, I think that there'll be a pullback, especially because if you look at ES, it's not moving. But okay, we're back up over 50% on the day. Yeah, it is the auto Elliott wave. I don't think it would be helpful for people if you don't have a firm understanding of Elliott wave, as I think it'll just confuse you because it does a lot of auto painting ahead of time, right? It doesn't show you that, hey, you know, your A and your C should be about the same depth, right? What it does is it, as soon as it recognizes the potential correction, right? Oh, our B leg broke below our A leg, it's gonna put C down here, and you'll be like, oh fuck, it's over, let's enter, right? But it, you know, this was truncated. This technically could have been much lower. So it could have been 75 points, right? That was what this drop was, 75. This drop was 40. Yeah, not a bad day, guys. Up over 50% on the day. Could have been much more, but you got to play things safe. And if you trade enough safely, you'll make money on the times you don't get stopped out. But you won't lose your port on the times you do get stopped out. So yeah, there's always, that Captain Hindsight, like, oh, I wanted it, but in reality, nah. I like how our Ether position is up 193%, and our SPY position is down 3%. Like, come on, SPY, what are you doing? Give me those money back. Give me that money back. Alright, boys. I don't like how SPY's red. I'm closing out my big winners. So I closed everything. I'm very confused. Why does it say my equity was over 300 just a minute ago? It's like 340. Is that the trading fees? Like, Jesus fuck. Or is it just some sort of glitch that TradingView has? So yeah, we did close out just a minute ago, and the only reason I closed that trade early, again, I was looking for the 56, which is the 168 push. The only reason that I closed that trade early was because SPY is lagging, and with SPY actually going more red while this breakout is happening, I just lost faith in it. Now I don't, you know what I mean? I don't. I'd rather take what I see in front of me, that 180% on the runner, and close out everything that's down, and reset for the next trade than risk the divergence. When you see, I don't like when SPY and cryptos aren't moving together. They've been moving in such perfect synchronization that you can actually, SPY is a leading indicator for cryptos. So SPY will, for the past, more so than NASDAQ, for the past 4 months or so, almost since, maybe 7 months since January, NASDAQ has pretty much been in synchronization with Bitcoin, and Bitcoin's king. So when you see something like SPY going down, right, while Ether's going up, one of them's gonna break. They do find each other almost always, and because it's a Friday, I think more than likely crypto's gonna pull back pretty hard until tonight, when they stop out all the people who left things open. All right, Gavin, take it easy, brother. So it's still on this bearish trend, but it never broke resistances. I wouldn't be surprised, actually, if crypto leads SPY into close. If we see something, Oh, never mind. There's a $711 million to the sell side, and we're green on the day. Just kidding. Yeah. I like to look at that number, those datas when they come out, because it often makes a huge difference in the sentiment on how people feel keeping things open or for closing them. So when you see like a struggling day with lots of fear in the market, we just had quite a big pullback. It's not indicative of I have no idea what I was saying. Whatever. I think that through. If you see a big pullback end of the day, right? And there's all these fear factors. I just don't see that $11 million more to the sell side, giving people faith and wanting to add to their positions here. I think more than likely people who are long will take profits to momentum traders. And I don't think bears will short here, though. I see no reason for them to short this weekend. I think this is possibly an ABC up. Or a 1-2. This is wave 1 up. Then 3 would be an impulse, more than likely. I don't think you can count 1 as an impulse. 1 was probably... Is it? This could be 2. It did pull right back to the 61... or below the 61, which is more often than not happens for wave 2s, because sentiment's still the other direction, right? So like a wave 4 pullback is usually very shallow because people are still like, yeah, fuck yeah, buy. Whereas the wave 2 pullback is the exact opposite. People are like, the world's still on fire, I fucked up again, let's sell. Fucked up by buying. That's the psychological difference between the two, and how that turns out for fibs is your wave 2 is usually steep and fast, and it's almost always below the 61.8 retrace, but it obviously can't fully retrace 1, and your wave 4 as a result, because they are opposites, if your wave 2 is steep and fast, your wave 4 will be shallow and elongated, and that's generally how things work out, just because of the psychology behind how people feel the sentiment for a pivoting trend, right? The very start of a wave up, it never feels good to anyone. They always, you know what I mean? They always have a lot of fear, and they don't want to, how many people have I bought SPY at, I think 420 was the last time I bought SPY. It was like many months ago, but whatever, it's in a Roth. It's going to go back over it. But yeah, my point is, so many people have bought on these downtrends that they have no confidence. The second we get that pullback, right? So the second we saw this pullback, it wasn't even a full retrace, but the second we saw it, it's just like, boom, we're going to sell off and hit that over the 61.8 mark. And that's wave 2, right? And then, oh, wait, sentiment did shift. There's still more demand. And now this is either an ABC up, right? And then another 5th wave down, which would be, let's just do... The easiest way to see it for me is to do just a little line, right? If I just do like the high to low here, because A and C are generally the same length, you're gonna get your estimated C is 407 on SPY. And now here's where Elliott wave gets really fucking awesome. Okay, so A and 1 and B and 2 are very, very similar. What that means is this 61.8 retrace after 1s, the wave 2 entry is almost always ideal, because even if this is ABC up, you'll still more than likely, if you're buying below that 61 retrace, get your stop above your entry and have the room to run all the way up. And if it's a ABC down, right, because they can just zigzag, they can indefinitely just do 3-wave moves. That's like the beauty of Elliott wave. Now if this is an ABC down, which is still a potential, right, so A and then B can't fully retrace A. I mean, it can, it'd be a flat though rather than a zigzag. But if it doesn't fully retrace here, right, we can get this other ABC down. And again, this stems into what I was saying earlier about bad risk reward. So that would be the same thing, but this time we're going to do our arrow the opposite way. So it'd be down, up, down from the high of this candle, right? So this time it would be a bottom at 37.06. I don't see that happening unless the news narratives go bad. Just such a shit show of a chart. Like every single crypto day chart, you have to like remove all of your studies because nothing will fit. Just a great liquidation. Jesus. Ether was almost 5,000. Oh, no, I never hit 5,000. Yeah, so like I was saying earlier, see how they're calling so we can do both ways, right? So you're 1 here and then you're 2. It's almost a full 50, so it's almost always a 60% or bigger retrace, right? And then now because 2 is short and fast, what that means is 3 is going to be short and steep, 3 is going to be long and shallow. Now I know this doesn't seem shallow, but it's only because Bitcoin moves parabolically. Like this move from 1300 down to 900 was a 50% loss, and this move from 4,000 down to 1,700 was a 70% loss. But fib ratios, right? If it'll let me. Okay, so for your fib ratios, right? It was a really bad fib. I don't think this Elliott wave counts proper. I don't think it's showing me enough data because it didn't start at 246. Yeah, it's not gonna work. But if we go to this 5 down, it'll work. So see how your 2 here retraced almost fully on 5? It's because sentiment's still super bullish. Like the bears aren't confident and the bulls are like, fuck yeah, we got this, and they'll buy and hold all these pullbacks, right? So they bought here and they held, and we came all the way up and we saw our wave 2 rejection. But that's almost 100% retrace. It's fine as long as it doesn't go over. And then that's where sentiment shifts. Boom, right? And now this is where things get interesting, because if this is the day, right? In a single day, Ether on December 4th dropped from 4,400 25%, and then came all the way back up and closed 10% down. Right, that's a crazy candle, but that's basically institutional selling. That's where they realized, okay, it's over. And then retail bought this, and then institutions sold again, and again. Now, the big question becomes, do we see a bear flag into a wave 5? Or is this it? Is this our end? More than likely, I think we have at least a retest down to the 1,000 mark on Ether again. So remember, I didn't catch these big ass gains here at the end of the day. But I also avoided this big ass loss. I just don't like the very end of the day, especially on Fridays. It seems like I mentioned crypto usually sells off and then rips on the weekends. If it's bullish, it'll do a little bull trap and then just fly. And Bitcoin on average moves about 4% from Friday close to Monday open for the market. And at 100x, that's 400%, and that's just the average, I think, since January of what Bitcoin moves over weekends. So that being said, I do like the swing stuff more than scalp on the weekends for Bitcoin. So I like to take smaller, lower leveraged positions and swing them, because then you don't have to even think about it. JB would be so disappointed in this trend line. We always used to laugh about it. I was like, yeah, man, I just draw all the trend lines. Like, it's pretty close. I'm not worried about the specific break. It's more about how it reacts on the retest. So I've never been so perfect, but look how messy this one is. I started here, and I got one line. And I said, yeah, that's good. Ironically, I find I do much better if I'm more relaxed with everything. Meaning, hey, like it's okay to take a losing trade, and it's totally expected, right? Like this leverage is way too high, so never stress. Expect the losses and just relax. Nothing needs to be perfect. Just find your high probability setups. Today we traded a wedge on SPY, and it broke to the bearish side, so I think we took like a 7% loss or something on that trade. But the reason I took that trade was because Bitcoin and Ether were breaking out while SPY wasn't. I thought we'd find an arbitrage opportunity in order to catch that 0.4% move on SPY that was not congruent with cryptos. Unfortunately, that didn't happen, so we took a small loss on that. But that's the same thing I'm always thinking about is what's the best risk reward for my leverage here. And as soon as the market closes, it becomes crypto. SPY does not behave in after hours like I like it. On Fridays, that is. There's so much changing going on in the actual in the actual big money side of things. There's barcoding and all that beautiful shit that likes to happen, pinning, OPEX settling, and what that does is it basically locks it into a range, and then it has like sporadic moves occasionally and then comes back to that range, and that does not make for good trading. So I can show you. I go to the bottom here, where it says stock screener, Pine editor, strategy tester, or trading panel, and then I click this and I connect, and then I scrolled down. So I didn't actually see it. I had to have the Bing rep who I work with show me or explain how, because TradingView hit it. It's down one page. So when you look at like the apps that they have available, it looks like it's not there, but there's a scroll button that's hidden. So it is there. You just got to scroll for it. I don't actually like entering on it, but I do like I don't like adjusting the stops and I don't like entering initially the stops, the position, etc., but I like the ability to adjust them, because once you put it on your chart, or once you're connected, like here, I'll show you real quick. I'm gonna put $2 long, just because that's the minimum, so I can show you. I want to wait like just 1 minute though, just for the bottom Bollinger. Actually, I'm gonna just put it short. I think we're gonna break down. Anyways, so I put my $2 short here. And what you'll see is immediately it pops up on my trading view. Where I entered is right here, and where I entered long is all the way down here, right? I think that's actually my free bonus account. It's the only other trade I have open for the $5. I don't actually know how that works. I think you only get to keep the profits on it, and I think you have like a minimum of, I think a maximum of 2 weeks to use it. I forgot what the date was, but yeah, once I get the actual ones from the Merc Trades exclusive, we can actually trade those together. And the cool thing about Bing's partnership with me is, as long as you're willing to actually trade, they're pretty lax on the bonuses and the incentives. I mean, just make an email account, fund it, and do it under generalized registration, and you have access to the bonuses as long as you meet the very, very easy to meet criteria. I think it's like 10,000 minimum trading volume, which is like 2 trades at 100x. Okay, so yeah, back to my little thing here. So I put my $2 short, right? And now what I can do on my phone, and next week I'm gonna buy a tablet, I think, because I have a Windows computer. I can't screen share my iPhone to my Windows computer. Unless I use shady apps that don't really have reviews, and I'm not comfortable doing that just because I trade large volumes and I don't really want any malware. So either I buy a Mac and stream on that, which, you know, would not be a good idea at all since I already have an amazing PC, or I buy a cheap tablet and stream on that. So I think I'm gonna get the tablet, and that way I can screen share my actual tablet screen the entire time I'm trading. And I'd probably switch up the format a little bit, but I think it would make it much cleaner to see everything, because the app is so much better than the website version for Bing. Like, they really messed up their website version. Yeah, so a minimum of 10,000 trading volumes needed, but I just traded 200 volume and I put $2 down at 100x. So it's really not hard to hit the 10,000, but as soon as you do that, you get access to a bunch of cool stuff. I think it's the $100 5 times 100 bonus cash, and they're gonna change the rewards around. So basically, we set up with what we think might be good for the first couple weeks, and then after that, we're gonna cater it just to whatever's best for you guys. But right now, I think it's definitely a pretty sweet deal. I don't know if it'll stay that sweet. But anyways, in a day, I think I'll get my bonus cash on the referee account I made, which we were trading on today. I put $200 into it, and we got it up to 280. Not bad. It was over 3, but we took a couple silly losses and then sat comfortably. Oh yeah, back to my stop loss. So anyways, I have my $2 on. It's short. It's down 20%. So let's say I want to put my stop 5 points higher. So that's a 63% stop, right? So that's 1245.18. And again, this is a $2 position, so I'm okay with losing 100% of it. Just showing you for the purpose. I didn't even really think about the direction. But anyways, I put my stop on my phone, and immediately it pops up here, right? Now, what I can do on my computer, when it lets me, is move it. I don't know why it won't let me right now. I must have changed the settings. Well, it worked earlier today on my other Bing account, but I don't know why it's not working on this one. But anyways, I'll figure it out. But you can do this where it's not letting me click anything. Also, how did it choose that take profit? I'm very, very confused. Well, remember when I told you how sweet and easy it was? Apparently, I don't know how easy it is, but earlier today it was super easy while I was actually trading on the other account to just manually pull these. Basically, I just grabbed it and moved it up, but as soon as I pulled the As soon as I switched it to the left side, I no longer could do it, and I don't know how to switch it back to the right side. Okay. So. I don't really understand any of this. Why is it saying minus $15 on a $2 position? Why is it saying plus 0.07 for the take profit at 12.27? Yeah, figure it out, guys. We'll get it eventually. Executions label? Yeah, I want to take one more trade just to get back over the 300 mark, but this is not a good time, so it'll probably be in the next 45 minutes or so. But I'll stay long and try to figure out these stop losses for anyone who's chilling. We did drop all the viewers. That sucks. Better than yesterday. We got 11 today, I think. Alright. Thanks for stopping by, everyone. Not a bad day. Just under 50% on the port for the $200. Could have been a lot more. We'll learn from our mistakes. The big thing, I think, is more trades, smaller size, looser stops. The reality of this amount of leverage is it's so easy to get 100%. I mean, this candle 1236 to 1240, so within 1 minute, so these are 30-second candles, within 1 minute, that's 50%, right? Now the big thing is yeah, see all these ABCs? This is such a weird fucking... So yeah, the big thing is you basically want to leave positions. Remember that $10 trade we took? I mean, the $100 trade, and I left $10 in it, and it was at 100, and it went all the way down to 30. But I kept my stop at 10%. And the reason for that is I've traded enough to see, okay, you should scalp, right? You should definitely scalp these moves because it's too much risk, you know, to just hold, like, you know, you enter here. Long, it just went from 1230 to 1238. You hit your 50%, and the next thing you know, you're down 50%, right? And those are all within like 5 minutes. Yeah. So the big thing, right, is scalp while you can, right? So take your 50%. I think I sold, of the $100 we had long, I sold 90 of it, between 50 and 85%, I think it was. And I might take a long entry soon, actually. It's just, it feels like it's gonna break down though. You know what I mean? Like, it feels like we're gonna get at least a push back down to, let's say, 1237. Oh, you know what I can do right now to show us? So let's take a look at that $2 trade. We're down 12% on it. Let's just double the margin, right? So if I add $2 to this trade, oh wait, it's going green. So I'm gonna double my trade margin. Remember, it's 100x leverage. So I'm putting $2 in while it's down 10%. So now what just happened, right, is I bought 5% back, and I lowered my leverage, if I'm not mistaken, by 50% because I doubled my margin. And now what you're gonna see, right, is this position, that same stop loss I had at 31%, it went much higher. It's now up here at 1245. and it used to be a 50 or a 60. I'm sorry, it used to be a 60% stop at 12:45, and now it's a 30% stop at 12:45. So that's what I mean by lowering your leverage, right? Now, the other thing is if I had a percent-based stop on, I don't, I have a price-based stop, but if I had a percent-based stop, it would just move it all the way. So, if I double my margin, my take profit would be twice as high, and my stop loss would be twice as low. So, it's really, really, really useful. If you don't want to close a trade, and it's a small enough trade that you can just kind of squash the leverage, it's very, very effective for preventing losses. So a lot of times when I'm trading on a heavier account, if I have $2,000 long on 100x, right, that gets a little intense. So I almost never do that anymore. Now I've put like $1,000 long, right? And just because I want the ability to slow down the leverage. So if I'm taking 4 incremental entries at 1,000 a pop, I need $8,000 to basically double my margin, and that's much safer in my opinion, right, than not. So if you get your first entry wrong and you want to, I think this is gonna break out. So if you get your first entry wrong, and you want to enter again, I find it's much harder to stay profitable if you don't add margin to your first entry. So in order to compensate for that, I simply make my first entry even smaller, and I still take that 100x because think of it like this, right? So I think my win rate's over 50%. We can scroll through my trades. I think I won like 90% today. But anyways, that doesn't mean, I'm making a stupid amount of money, because I make a lot of mistakes, and a lot of my trades are stopped out for, an 8% gain, which after the 4.5% trading fee is it's tiny. But anyways, I enter my position long, right? It goes against me. I entered incrementally. I know I want to enter again. I want to slow down that margin. So I add margin to that and I slow it down. Now what happens? We did break out. As I slow that margin down, right, all right, so I entered here, came way against me. I added this margin here, and then it started coming back. Now let's say I double my margin. I'm at a 50x now, right? So it's green, but I'm only moving at the 50x leverage. But here's where things get cool. If it's green, I can take the margin out that I added. So that effectively lowers your margin while you're in the risky area and then raises it. Oh, we just lost, guys. We lost 30% of $4. So tragic. But yeah, that was our little trade there. I just wanted to show you how you could adjust the stops on that. And I wasn't really paying attention. Like I said, I didn't want to trade this. I did see that breakout, but I don't like entering. I like right side of green. Like this isn't green, this is red. I want the right side of green. Ooh. But yeah, so tricks that I've been having a lot of success with. Incremental, first entry small, add margin to it, and enter along a second entry that's bigger than your first entry if it goes against you, but it's still within your range. So basically, identify a range that you're willing to go long in, and start small at the top. And then add margin to it if it goes against you, and average by buying a new long position, right? So never go over that 40% of your port. And make sure you have money to add margin if you need to, and money to reverse the trade. That's probably the most important thing. is if you have a trade that moves sharply against you, you need to have, you can't have 100% of your port in something, otherwise you'll get stopped out, right? And remember, we go back to what I said earlier about stops. Like, there's like these clusters of stops because people enter in these ranges and then they'll put their stop, 10 or 20 or 50 or 100% above or below the consolidation. So this consolidation at 1238, right, went to what, 1248, which is just shy of 100%. And then immediately, right, you see this wave of profit taking happen, and then on top of that, this is a resistance. They're looking for the double top play, pop down. Crazy. Yeah, so you can't have your port 100% long, otherwise you'll make this mistake. So you're short, right, 100% of your port. You get stopped here. Now you're like, oh fuck, what do I do? You're waiting. It continues to go. You enter long, right? And then everyone else's stop gets hit or everyone else's take profit gets hit for their long positions, and the smart bear is short here at the same time. So now you just took your stop loss here, you entered long, and you took your loss here. So to avoid that, right, if you see after your initial entry and you add margin, you take your second entry, if you see things aren't, and you shouldn't be multiple entries if it's not consolidating towards the end of a consolidation. You know what I mean? Like if it's an impulse wave, I don't really want like 4 different entries in the impulse. No. But anyways, so take your incremental entry, add your margin if you need to, stop your lowest thing first, leave runners, and then always have money to inverse the trade. So if I take my first 2 entries and I add margin and I'm sitting around 30-40% of my port long and things aren't looking good, I don't like the guessing game. I'm not going to sit there with both of my positions red and not start to hedge. At that point in time, right, I'm accepting whatever small loss I see on my screen as like a minimum, and, as a maximum. And in order to do that, in order to do that, so this is an impulse wave, and because of the severity of this push, I think that we'll get a push to maybe 1260. But it has to be right here, otherwise I'm out of the trade. So we see wave 1. Oh shit. So 1254 is what we want. So I just put my take profit at 1253.5, 40%, and then I set my stop loss to something equivalent, so 40%. And the reason I bought this is because I love to do what I say I don't do and buy long positions at resistances. No, the reason I bought this is the timing on everything. I think that we're going to squeeze much higher. If you recall, most of the time I see crypto goes red at Friday close for a few hours. And that means that there's like a predictable pattern which people trade around. So because that didn't happen today, I think that we see a squeeze. And then I also like so 1 and 5 of a parity for Elliott wave. So I like to measure the length of 1. Damn. Yeah, so there's a parity on them. They're usually the exact same length. And that is, to the T, the same length. So we actually may have topped here. Even though we didn't hit that 1618, we might have topped. This should be good. Yo. All right, so because we bought at the top of a breakout, what I don't want is to lose the trade. So I'm just gonna put my stop in at 8%, I think. 7.8%, yeah. So 40 cents below the current price. So I did get stopped, but I took off 4%, and then of course it continues up. I fucking don't like market makers. Anyways, this is where I always get trapped, though. You know what I mean? I get stopped, and then I try to re-enter right away, so we're not going to do that. If I get stopped, they're shorting. If they're shorting... 54 is so close, though. Like the devil, he's like, buy the fucking position, you pussy. And then there's like the angel, who's like, you've done this so many fucking times. It's not the same as stocks. Crypto literally is set up to liquidate people, so they make trap candles. Stocks don't do that. They're not made to liquidate. Crypto's crazy, man. It does not move similar to stocks. It moves similar, but drastically different in the minute levels. A 1 minute candle opened green, so I put 10% short. And I'm gonna put 20% long if that doesn't pan out. Nah, we're good. We're sitting at the top of the Bollingers on the 5 minute, and that's usually a pretty good time to short. We're also getting close to that 168, so I put 10% short to start, and then I'll put another 20% short. No stop on the first 10% yet. Add some margin. Just 60 to start for the stop. And if you recall earlier, I mentioned because we're trading counter trend, we want to be really careful. So I do not, by any means, want to trade heavy at the start of a counter trend entry. The only reason that we entered short was based on probabilities of what might happen. So that being said, we are green on that trade now. So I'm going to put my stop at 13% green. But the reason that I entered that trade was because A, we were hitting the 161.8. B, our wave 5 had already met the same length as our wave 1. And remember, just how 2 and 4 are opposite, meaning if 2 is shallow and long, 4 is going to be steep and fast. And if 4 is shallow and long, 2 will be steep and fast, vice versa. So what does that mean? Well, basically, very nice, 40% on that short there, guys. So yeah, it went down 20%. We put our stop to 60. I didn't have time to enter the second entry, and as I was mentioning, I don't actually want so I put my stop to 28. I don't actually want to enter heavily because I could have gotten it wrong, right? We technically hit the top of the Bollinger here, but because we didn't get close to the 1618, I didn't take that short, and that was the 1 minute Bollinger. So what I did is I swapped over to the 5 minute chart on my phone, and I waited to hit the Bollinger on the 5 minute chart. And as soon as I did, as soon as we broke over it, I took our short trade, and it went all the way down to minus 20%. And I never got to add to it, but again, the reasons we take this trade are ahead of time. We anticipated what would happen before any indicator or anything would have told us to. If you watch the replay, this short indicator came on maybe 30 seconds after we took our short trade. And they basically confirmed after the fact, right, that, oh shit, hey, nice fucking trade, man, we're up 50% on that, that's good. Anyways, they confirmed, hey, you were right, the 1618 wasn't going to get reached. Wave 5 was already too extended because it's supposed to be the same size as 1, and then boom, preemptive short worked. But because that's all preemptive, and because it's counter trend, you don't want to go long heavily. That's why we only put 10%. Thanks, Jake. Yeah, man, I don't really know what the fuck to talk about. I'm new to this streaming thing, and because I want to do it consistently, I think this is so much fun, right? I mean, I can't tell you how many times I turned like 200 to like 2,000 in a day. But that's like me adamantly trading heavily. I'm gonna put my stop to 36%, guys. Just guarantee that I get a nice $10 gain and we get our equity over 300, so we hit that 50% on the day. Again, I mentioned earlier I only wanted to take one more trade to get over the 300, and as soon as we do, I'm probably gonna call it for the day, and then I'm gonna stream this weekend, I think, just because I really enjoy doing this and I want to get the hang of it. But back to what I was saying before I went on that super long tangent, I have no idea what you guys want me to talk about, so basically I just talk about what I'm thinking while I'm taking these trades, and occasionally I remember to check the chat. So if you have any questions or want me to look at something, feel free to ask. Yeah, if you can do this successfully with $200, it's literally no different than $2,000. It takes a while to get to that point. I'm still not comfortable, at the $20,000 mark. Like it fucks with you. 69%, 70% stops going to 50, guys. We're putting our stop to 50. We just hit our $300 on the day. Yeah, for sure, man. But yeah, like I was saying, I don't actually know what you guys want me to talk about, and it's kind of awkward. At least it was. It's not that. I'm getting better at it. Just maintaining a conversation with yourself for extended periods of time gets a little bit awkward. So help me out. Let me know what you guys want me to talk about. Let me know what I should be. If you have any questions, definitely. No. I gotta stop us out. Yeah, definitely. I probably won't give you nearly the analysis John does. We compute things very differently. There's our stop. All right, boys. That's our 50% on the day. Port went from $215 to $300, $292.27. We need one more trade. Let's do one more trade. Boys and girls and anyone else. So this is still a short opportunity for the record. And the reason for that is we broke below the 61.8. And it broke easily. But remember that ugly trend line I drew that JB would be ashamed of? Well, not so ugly now, is it? That's the thing with trend lines is everyone draws them on different time frames. And what that means is they're going to be slightly different, so they don't really need to be perfect. If anyone, enters short the second a trend line breaks on anything less than like a week trend, rather than waiting for, a retest, you're just going to lose money. Because, again, when there's that much data being compiled over all these different time frames and drawing all these different trends, they're not perfect. All right, one more. It's not high probability right now. So the other thing I really like is the hot zone indicator. It's not showing the labels. These are all free indicators. So anything you see on here, you can just type it into the indicator spot and pull it up for yourself. But basically, I started using TradingView 2 months ago, just because you can't chart crypto on Thinkorswim. I think Thinkorswim's better for options, just because TradingView doesn't even have options data, and not being able to chart options is probably the biggest pitfall. So yeah, I did see the short entry there, but this isn't a continuation, right? So why I don't like this range is more than likely we're gonna bounce off this trend, bounce, bear flag, breakdown. So I think we'll see a push up to 49 almost before we see that push back to 35. So don't want to take that trade. I would take something, let's say 40-ish. But again, I think it goes bounce, reject. So here should be the long entry for not us, but like this is where bulls will go long, and then the stock will do this, right? It'll go up. Oh wait, I got this thing under control. I do like some of the tools TradingView has. So I think we go bounce. Oh, we already did the first bounce, and then it'll reject here and come all the way down to here. And the reason I said that is Elliot. So yeah, so we got the first bounce, right? And now we're expecting a full push above this to, let's say, the 50 retrace. But it'll be choppy. It'll be like boop, 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 like that. And then this range should give us our C, which I do think, actually we're still intact for the trend is the only issue. So we might not reject. Yeah, trend's actually still intact. We haven't. Is that a bad moment? y'all, if I can't see, I'm trying to compute which way I want to trade, and that's like a really good sign that you shouldn't fucking trade. I mean, like, part of my brain's like, hey, this is gonna ABC down. I'm very convinced that we'll retest this level, which is a 40% trade if we do from here. But I don't know if it'll hit that 1262 or if we'll ABC down below wave 4 to somewhere around 1234, 39. Very, very confusing. Ape? Oh, I gotta check this chat more. Yo, Ape was like $27 a few days ago, a few months ago. 27. Went down to... Yo, nothing beats Luna though. Like, Jesus. This is probably the... Hands down, I would say that this is the biggest loss of wealth in the shortest amount of time I've ever seen. 100 to 0.0 fucking 3. I really like Ether when the volatility is appropriate, and today was a beautiful day for Ether. $400% trade if we hit Luna to the 168. It's gonna consolidate more though. See the wedge? It's already starting to form. I think that will come back to. I think we got a little bit of time. Damn, that's some sick shit, Joey. I caught a nice fat trade on Ether this morning. Nothing 600% though. It really bugs me that I lost like $600 on a much bigger account the other day on a trade that I took at like it's like 1100, and I was stopped out by 3%. I was 3% from getting the low. It would have been well over 1,000, but it doesn't do that. You can only get 1,000 unless you add leverage or margin, but that lowers your leverage. And then if it goes against you, you can't take it out. All right, UNIFI. Oh, Jesus. Dude, what? What happened? Why is it up 25%? Oh, it always moves like this. It's interesting to see it move so aggressively to the upside, yet so shallow to the down. It's very opposite of how most things move, you know? Most things are like elevator up. I mean, elevator down, escalator up. This seems to be the exact opposite. Oh, dude, no, this is beautiful. If I had seen something, so again, I mentioned the other day. I don't know. You were probably in John's stream, from what I gather. But what you look for is volatility when you're trading this high leverage. You don't want to get stuck in trades, and you need enough movement that it's worth the risk. So when you find something that's moving 25% like this, if I had seen this, I would have exclusively traded this today. You know what I mean? Because hey, if I'm trading, what's it at 50x? That's 2,500. No, 1,000, 1,250%. You're pumping Shiba. Alright, let's take a look at Shiba. Oh man, that doesn't look pretty at all though. It did hit a little ABC. But is that A? Like, are we about to see B? Dude, I haven't checked DMs in so long. Whoa! Oh. Alright, y'all, I want another trade. But everything feels like a fucking gamble right now. Like, I see no trend that doesn't look like I'll lose money on it. Alright, I gotta add those to my watch list. So, first one was UNFI. Add. Okay, next one was sell. What else do we have? Ape. I already got ape, don't I? Cheap. I'd be careful on sheep, bro. I don't like their wave count. I don't think that's appropriate. I mean, technically 2 didn't break below 1, but I don't like that. 1, 2, 3, 4, 5. Yeah, no, I'm not touching sheep. That is, I do not like expanding wedges. They're so unpredictable. It's so hard for me to get it right. I think what you find is you get your own niche of certain setups that work for you, and then you focus on them so much that everything else just feels too risky. like entering, breakouts doesn't feel good on crypto. Like almost always you go down 20% if you buy like a breakout candle. Half the time you get stopped out, the other half it goes green. I don't like that risk. Same thing, I find bear flags and bull flags as well as wedges extremely easy to trade. Megaphones, expanding wedges, I think they're the hardest thing to trade. They get me so excited, you know what I mean? Because it's like, oh my god, we got an engulfing! And then like, you're like, wait, we got another engulfing the other way! And then, you have half your port long and half your port short, but you're bought your long position at resistance and your short position at support, right? Yeah, don't do it. Breakout's bad. Although there's a difference. I guess I should say, like, a real breakout, you know what I mean? When it's moving like 5% in a minute, that's a little different. Like, that's worth the risk. But like a little pop above a candle, like an engulfing, crypto literally doesn't give a fuck about like chart patterns. I think it's because it's set up for liquidations. You got to consider there's so much money being traded at high leverage that the market makers absolutely have algos setting up their buys and sells to try to maximize the amount of liquidations that they have, because unlike stocks, right, you get liquidated. It's similar to how market makers, it's the same thing rather, to how option market makers cater around making people lose money. Because just like a liquidation, options expire worthless, and that's money in the market maker's pocket, right? So they definitely, it definitely trades subtly different than stocks, but the difference, although subtle, means you have to relearn how to trade around minute time frames, right? Because you won't see very often engulfings back to back, or false breaks almost every time like you do on crypto. That's definitely market makers setting up algos to maximize liquidations. 100%. I can't tell you how many times I've bought that little pop, oh, we're over, right? And with stocks, that's like 60% of the time. If you break that resistance, right, and you buy that retest, you're gonna see gains. With crypto, it's like less than 50 because they let it happen so often. So your brain, because we've traded stocks and options our whole life so long, right, we see these consolidative patterns, and then we see a breakout and we immediately want to go long or short with the breakout, but that's the trap. That's literally it. Don't do that. At least I don't do that. Yeah, the other big thing, the other biggest thing is shit, I forgot what I was gonna say. It's gone. ADD. Sorry, my mic was muted. So see how this doesn't happen with stocks, where you see engulfings back to back to back to back to back. That only happens in cryptos, and that's strictly that's liquidators. those motherfuckers. So that being said, we can use that to our advantage. If you ever see a small breakout, you can short it. Almost 60% of the time, I've been successful if I see like a pop-up on a candle that's not backed by volume. If you short that immediately, almost 60% of the time, right, you'll get a nice little 20%, because that's how the market makers do it. They want that quick stop on everybody who went long. It's like the exact opposite of stocks. Alright, it's a long time. I do want to go long on Ether here. I'm going to do it. I'm going to put 10%. But we're at resistance. So I need two things. I need this 5-minute candle to close without wicking out. And then, because we're so wicky, you don't actually want to, so here's what I mean, like this right here, if you short this, more than likely you'll get 20%. You just gotta wait right there, pop, short, 20%. Went the other way. Oh. Gotta wait for a minute. So yeah, so there's the pop. If you short at the close of that candle, more than likely you hit 20%. So 1247 to 1245 would be 20%. Again, this isn't a trade that I'll take. It's just things that I'm noticing while switching from stocks to cryptos. You know, eventually, I mean, not eventually, if that setup occurs within a range that I like, this is a shitty range. Like, I don't want to trade this. If this same setup happens down here, right after a real ABC, and we spike way down, right, that to me would be an entry. But here, I'm thinking I want to short. Oh shit. NASDAQ went to 0.18. It ripped. Yeah, so again, this is just what I've noticed. So 1 minute chart, there's your breakout candle. You're like, oh fuck, look, we got engulfings. We're over resistances. You know how many people went fucking long here? Increased volume, broke over resistances. I swear, it's like 60 to 70% of the time, if you go long at the top of this candle, you're gonna go at least 20% red. Now this time it looks like we only went 10% red, right? 47.3 to 46.3. Yeah, that's 10%. But yeah, that's why you don't buy breakouts. Buy the retests. Hey babe, I'm just finishing up a video. Let me call you back in a little bit. Bye. Alright, one more trade. Y'all ready for it? Which direction do you think I'm going? So we're short, 10% start. I'd add again at the 51 mark, and then my stop, let's go 54. Why did I short there? Let's talk about it. The reason I shorted there was because of the fib ranges and the just the intensity of everything. It doesn't really make sense to me to see a breakout move at 5 o'clock after volume went down on a day that Ether's up this much. so yeah, there's our entry. And if you were hanging around with me there, you know how many times I wanted to go long on that exact candle? Well, if you do it enough times and you lose the fucking trade, you eventually just teach yourself to not want to do that. You're like, no, this is a fake breakout. It's crypto. You short that shit. And what ends up happening is, look, I got another 15% gain. So put our stop to 7% and we chill. And now we hopefully don't get stopped out at that 7% mark. Yeah, we're going to. So stopped for 7. Maybe not. There it is. All right. So again, yeah, the big things I look for are Bollinger. I like this. I mean, obviously you can't really see, but the Bollinger Bands on cryptos are so effective. It's insane. So what I'll look at is a trend break at a Bollinger Band. So if we break trend, I mean, it's inverted again, but if we break trend here, right, as you can see what we did at 1254, you short because we broke trend off of the Bollinger Band. And then the same thing, if you look at the bottom Bollinger Bands, because it's a little bit bullish, we never actually hit below one, but you don't want to go long unless you're near the bottom. I don't know why, but I almost feel like Ether's been leading Bitcoin. Maybe it's just because I trade Ether much more than I trade Bitcoin. I don't find Bitcoin easy to trade. There's too many numbers. So when I like adjust my stop, I gotta like click it 20 times to get it 20%. We're gonna break out to the upside, I think. Now changed my mind. And go pop and then down. So the other big important thing I've learned is it's totally fine to take a 3% gain. I always put my stop around 7%. Once it's about 18%, I try to get it about at least 10% difference. And I usually try to wait to give it time, right? Like a few retests before I put that stop in. Now, when you do get stopped, I do not re-enter right away. I always want to, like immediately, you know what I mean? Like, oh, I just lost $100 in this trade. Let's jump ship, and make it on the same on the direction we just got stopped at. But there's a reason you got stopped. You got stopped with everyone else too, who went long, right? Or went short with you, and what happens is, if you multi-trade, you'll tilt. So I try to, two things. I try to limit my trades to trading around 5 and 15-minute intervals, and I try to make sure that there's a lot of time, like there's time for the momentum to recalibrate before I actually trade. So anyways, back here, this is our first arrow. We said up, and then I said up again, and up again, and then I said down, right? And I think this is the short. I'm gonna put 10% short here. We didn't break trend or anything, but I just see it happening. Why? Because I drew this arrow. Like, oh no. I think the tech end is saying go long. I don't really give a fuck about what my computer say though. I just use them for confirmation bias, and if they don't confirm my bias, I tend to not care. I don't like how that popped up there though as soon as we took that short. Usually I'm in sync with my indicators, and I'm seeing this as a wedge down. Now I did only take a 10% entry because I want to add, and I think that our acceptable range is basically up to 155. Nope. Alright, I'm gonna put 10 more percent short in just a second. All right, here it is, 20% this time. So wait, we're 151.5 if we can. Nope, gotta do it now. Both these trades actually might take a while, so stop loss for both of them to 55, and then I'll add margin and adjust it if I need to, but I think we're okay. The reason I do 55 is so many people use 50 that I've found I've seen like at least 4 times trades go minus 52 or 53%, not hit my stop. Alright, can we get a fucking trend break? So, we're a little off. I didn't get the first gauge down as far as I should have. I was off by 50 cents. And then, I didn't get the timing exactly right, but I did get this direction perfect. And to the upside, I was off by 50 cents. Now, all we need to confirm this is a fail to break over this level here, and we go boom all the way down to 37. There's the fail. And then I'm gonna pop over to 5 minute. There's our rejection candle. We should see volume pick up here. And yeah, it looks like, if I'm correct, by 5:47, we'll be trading around 36. But this is what I've been doing for like 3 or 4 years. Is basically you should always try to anticipate what the stock will do ahead of time, just because it's free practice, and then plus, once you get good at it, you'll be able to um, crush trades. Now the problem with stops is because we're consolidating. If I put a stop loss in on either of these trades, more than likely above my entry, I mean, or below my entry, so we stay green. If I do that right here, I would have been stopped out, right? So I want to wait. I want to wait until we get distance between there, and then put my stop down. I don't even look at Bitcoin. All right, so because we scaled harder on our second entry, we're actually green. But what we want to do is put our stop loss above our entry price. So I'm going to do 49.15. That's 6%. So actually, let's do 0.1. Just because I think it'll be enough space, right, to not get hit, but also give us enough room to get green on this stupid trade. Anyways, I think I should probably just close out here. Yep. Nope. I did it a little backwards. Usually I want to get I didn't have enough profit. We didn't get to the 6 or 7% green on the bad entry, the 10% entry. So I ended up taking 14% on the better entry. And now I can't lose more than 28% on the bad end, the 10% play. Otherwise, I lost money. So I put my stop to 14% on that, just to make sure that I make a couple bucks on the trade. The logic behind that is there's no day trading limit, so why would I ever risk the going negative on this entry when it's a shit entry as it is? You know what I mean? Like if it was the first trade or the second trade that we took we took 15% on, this music sucks. If it was the second trade, I'd be much more inclined to let it get more red, but I already saw that the price would go up there, so I don't ever want to risk that more than a 50. So yeah, we're gonna get stopped right here. 21 cents from being stopped. So all in all, it basically we took 14% on the 20% port trade, and that was a $7 gain. And it looks like we're gonna take, yeah, we took a 14% loss on the 10% trade. With fees, pretty much $2 gain. But, like I said, we don't want that shit, right? I don't want to miss that 14% stop where I make my $2, and then and then deal with a really red position and the risk of, that. I don't like how Bitcoin moves either. It's so signally. You know what I mean? It's like everything's signally because it's such a big number. Ether, much better. I have like 5 charts up. I actually haven't pulled up any Bitcoin in a while. I just don't like how it charts. Like, this is a... It gives too much to both directions. Does that make sense? Look at Luna. Look how Luna runs. See how Luna doesn't give a lot to both directions? Oh, motherfucker. Remember like 20 minutes ago when we were looking at Luna? Yeah, I do. And I was like, oh hey, I could get this price up here at 12.4, I'll be 500%. Yeah, it happened. It's goddamn. We're at resistance, but I really think we're gonna break out. Like, really think so. Actually, we're sitting right at the 61.8. That's actually short here. I'm gonna put $10 short, 10%. And then I'll short again at maybe. The reason I actually decided to short here was simple ABC. I actually charted the ABC out, let's see, 3, 6, 9, 12, 15, 20, 60 minutes ago. And you can see, it's like, hey, look, it'll probably do this. So if we do come down to 12.27 and we catch that trade, just know that that was probably 20,000 hours of doing that shit to get there on, tickers all day long. It's just something I trained myself to do is watching a ticker and then predicting where it'll go. Um, and it took a long time, but I got fairly fucking good with it. But my point being, if you can't predict where the ticker will go, you shouldn't be fucking trading. If that makes sense. All right, so we're up 3%, but I don't think that'll hold the gains on the short that we took. I want to add 51.44. I'd add a 20% short. And then if we get up to the 52 mark, I'd put margin into the 10% trade. And then again, I'm looking for a bigger push on this, so I'm probably not going to adjust my stops just because I'm a little sick of the 5 or 6% gains. I'm not going to adjust my stops until we break below the 45. I'll put my stop at 47. Yeah, I could definitely see a massive push in cryptos, but I think that we actually need another push down first. You got to consider with all the illiquidity behind these coins, it gets a little intense to I'm sorry, with all the illiquidity behind staking, basically they made all these one for ones that are no longer one for ones, and they promised everyone their 10 or 20% or whatever the fuck it was to stake their cryptos, and then they swapped their cryptos to like a WETH or a different one for one, and then they made their money off of it, and they did really well. Like they were making like 400-500% from like 2019 to 21. But then the Luna collapse happened, and effectively it lowered the value of the one-for-one exchange. So now they have, I don't know the exact number, but just for the sake of talking, they have... Damn. It sucks to look down and see such a small trade. I'm really used to trading much bigger, but anyways, they have... They have 0.75 WETHs, right? Because the value of those dropped from 1 to 1 to 1 to 0.75 from an Ether to a WETH or whatever it is. But what this means is all the people who staked their money, they literally can't get it out because the companies no longer have the liquidity they need to let everyone get out. So you've been seeing these companies like Celsius and the sorts, they actually have to... They actually have to stop withdrawals, which just provides even more fear, and more companies are having to do this, and then we're seeing more and more regulation talks. Honestly, it would really suck to see the government regulate crypto, but things like that Luna collapse, they're going to be their ticket into doing it. But yeah, I think effectively... This market's not moving right now. I don't know what happened, but like this position has been sitting in this range for way too long. sitting 4.5% green on this position. I have been for 6 minutes now. So yeah, very tight range. Nothing fun happening. Not gonna put any stops on. I will add if we get somewhere close to, say, 54, 52. Because that's 51, so it's a 52. Oh no, it's the wrong chart. Sorry. It would add if we get close to... Oh shit. I'll just put a 55% stop in right now for now. Again, this is a 10% position, and we're green on it, but this is a little scary to see such a tight consolidation. Like, all the volatility died this past 20 minutes, which in turn means both the buyers and the sellers are loading the fuck up because they both think they're going to win. But only one side can win. That's the law of non-contradiction. So eventually one side will overwhelm the other and will either sell off or squeeze. But that's why you always want to trade around consolidations. But you should definitely be careful because this is a pretty 50-50 consolidation. If we break over that 60 retrace and clear over the 86 resistance, I mean, it could run 100% in like 5 minutes. Or much more than that, 100% in like a minute. But most of the time, consolidations break down first. We in a bear market. Alright, there's our 15%. That did get me over the 300, so I can finally get the fuck off. Awesome work! I think I lost like 2 trades. Not bad. What's the price that we wanted to take that profit at? 727. So let's go. Let's go 38. 1238. And let's actually adjust our stop down a little bit to 47.5. So 20% gain is the minimum I'll take on this trade. We're up 30%. Anyways, I hope you all had a wonderful time trading today. Sorry that I'm not very good at this entertaining part yet, but I am great at trading. And my TA is pretty fucking bomb, so definitely stick around and we can do some damage together. Boom. Drop, baby! They really don't want to let all these people get out of this short, make all this money on their short position, because remember, consolidations equal loading of both sides, right? And that's what a squeeze is. If half the people say long, half the people say short, and the stock doesn't move anywhere, basically they all end up over leveraged and one side gets crushed. And the concern though is the fake out, right? So this is giving bears so much confidence right now. We saw the 3-minute break, the trend break, and now we're bashing into support, right? These are all good things for the bears, but Alternatively, that means that there's a lot of short squeeze potential if we don't break down, because a lot of bears are going to be shorting here. I'm going to close 50% of my trade. No, I'm not. I got a 20% stop. I'm going to keep it at that. It's 36 up. Let's keep our 20% stop. Let's give it a little room. I do believe that we hit the price target that I mentioned over an hour ago when I drew those little lines. I was like, hey, I was going to do this. And lo and behold, off by 50 cents to the up and off by 50 cents to the down. Timing wise, I actually nailed it to the fucking T. So that, my friends, makes me feel good. I need an editor to like clip these things, you know, like someone be like, hey, this is him talking about what's gonna happen, and then like fast forward and show what happens, and then like a fail clip too. But basically, I need an editor because I don't know how to do anything. I closed 50% of my position at 46%, y'all. And the reason that I did that is because we hit the bottom Bollinger on the 1 minute chart, which usually means that we'll bounce up at least 10 or 20%. Oh man, it's not anything you can't do. Just fucking get in front of your computer for 8 hours a day for a few months and just fucking draw. Like, hey, this is what's gonna happen. And make sure that not only do you draw the levels that you think are gonna happen, but the timings that you think they'll happen at. So if we go back to our 1 minute chart and you take a look at what I drew, basically I said, okay, this looks like we're gonna go up, 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 consolidate, reject down. And our low level that I had, where did I put that? There's another arrow somewhere. Was off by, so this is the bottom where I had our low going, was off by 40.97 to 41.96, so about $1. And then our high level, about $1. So it's off about $1, so 0.01%, and about 2 minutes on each direction that I anticipated. That's not very bad. Makes me happy. Anyways, 50% day. Took a little longer than I wanted it to, but not bad. Oh, how did we do, guys? Did my drawing not impress? Are you not entertained? Our profit take just hit, so nice trade, everyone.
I just want you to know that
Who hit their profit take? I know I did. Remember the level I said that we put a profit take at? This is what you have to start paying attention to. What the fuck? Why won't it show me that trade?
you're crazy.
Whatever. Anyways, I'll find it on my phone in a second, but I was about $1 off from the low. But that's okay. I don't really want that extra dollar. I want the consistency of this is where my TA says that we will almost inevitably go, right? And from there, I'm gonna put my stop loss $1.50 above. I mean, my take profit $1.50 above that, because I'm okay with not catching the tail end of moves. But anyways, that was a trade that we planned out since 4:45, and we planned our entry. $30 minutes later, we entered 50 minutes later, and we were off by $1 for the high and the low. Yo, motherfuckers. You see that? You see that timing? Do you see that level? I do. Who's the fucking man? So that's a little upsetting just because, like, as much fun as it is to trade with a $200 account, I really, really, really wish I'd take that on a real account. That was such a clean setup. Alright, someone should edit my videos for me. Tell me what editors get paid. If you're good, I'll pay you. Cause like I want those clips and stuff. But anyways, there's only 5 of us, so I highly doubt any of us will edit today. Let's go, Mars, $230. Nice, man. Why would he have ever wanted to buy Twitter in the first place? Like, it's such a shit investment. Anyways, what a fucking call. Yeah, I made quite a few grand today. Trading. It's like actually insane how much easier it is to make money trading crypto than it is trading options right now. It's just the fucking Greeks, man. They're so out of whack. Like, it's anticipating this massive snapback, but it's just not gonna happen, and everyone fucking knows it, and it's the biggest scam. So unless you're buying like 0 data expirations, like you can't get a decent price on contracts. So you know what I mean, the extrinsic is just through the fucking roof. All right, my rant's over. You can tell I've just like not been pleased with the options market. On the other hand, crypto, like, it's so easy. It's absurd. It's also so easy to lose it, especially like if you're trading with a small amount and you go and tilt, like your brain, you know what I mean? If you're used to trading like a heavy account and you're trading with like $1,000, your brain will just like let you wipe that real quick. You're like, oh fuck, let's not do that ever again. And then like you'll bring 200 back to 1,000 the next day, and then you're like, wow, I just did that. So basically, it is the best, but you gotta be pretty chill with it. All right, yeah, I'm calling it. I think we did good. Good enough day. I don't really want to trade anymore. And the reason for that is if you look at the intensity of everything, it's just dying. But this is a good long entry. And then you trade long from here to the 61.8, but your first profit take would be at the 50, so it would be, what the fuck is that number gonna say? I can't remember. I think it's 42. It's over 50%. No, I don't think it's worth the risk. I think that we'll consolidate here. And I think that there's a very good chance that we break down lower. Market's closed. Oh yeah, I'll hop on tomorrow. We can do some trading if there's some volatility, and then I'll run through some how-to videos on setting everything up, just because there's lots of, and then some tips and tricks on actually trading. It took me like almost a month to get consistent, because it's just subtly so much different than options. Again, I'm a cynic, but I think that option market controls the equity market, because there's so much money to be made by the options market makers. And I think that's just capitalism, and it's the same exact concept for high leveraged trades, right? I can sell a call and get paid, and it can expire worthless, meaning I just made everything, right? Like, or I can loan, you know, some Bitcoin or Ether, right? And then liquidate, where they go worthless and I get everything. It's very similar, but it's very different because of how they want to go about the actual task of getting everything. Yeah, so anyway, that's such a sick fucking trade. I'm really pleased with that one, if you guys can't tell. But anyways, I'm calling it. I gotta go. I'll ramble forever. Thanks for stopping by. Y'all the best. Hope we all crushed it today. I had a nice 50% on my counts, and I called out, I think, only winners besides that one stupid loss, which happens. We just didn't adjust our stop quick enough, and it was too short. All right, good shit. I'm out. Have a good weekend. See you tomorrow. Oh, don't forget to subscribe. Like, this shit's really hard to get trending on YouTube. I need help. Thanks. Hi, Brooke.
Hey girl, you wanna go outside?
Buddy, we'll go for a walk, huh? Peace. Yeah, of course, guys. Always a pleasure.